Hello, Oracles. Sorry for the delay. Had some technical difficulties, cannot get my TV working properly, but we don't need that. We're going to be discussing plenty of other things today. We don't need that in the back. So, looking at this week, a lot to go over today. We had CPI readings coming out, PPI readings coming out today. Closing still on this downward trend that we've been on. Gort and I have been doing some chatting about TSLY and all of those YieldMax dividends. Some of you had asked me to do a reaction to Brad Ferguson's video, and I will discuss some of my thoughts on that today as well. So, yeah, lots to go over today. I'll give you guys a few minutes to get on. We'll jump into some charts and take a look at some stuff. But yeah, overall, I've got some things I'm going to be working on this weekend. I've got to run some numbers, some new investing strategies I have for myself. One of the things, one of the best pieces of advice that I have been given, and for those of you who follow me on X, saw it over there, is many times we go through life and we say, man, I wish I knew 20 years ago what I know now. I wish I had done things differently. Obviously, we can't go back in time and change that. But one thing we can do is pretend that we're 20 years older than we are now and look back at where we are now and think, what would we like our today self do to make ourselves better in the future? What would future us thank us for? Somebody had rebutted with, that 20 years you're going to gain wisdom. This is very true. So we don't know now what we would know then. However, when you look at some other people that maybe are 20 years older than you are, you can utilize their wisdom. They know. So I'm 43. I can look to people and, honestly, sometimes our parents are the ones to go to, but you can look at somebody, maybe for me, I'd look at somebody who's 63 and I can say, hey, what would you have liked to do when you were 43? What did you wish you could have done or that you had done differently at that age? And I ask them, you utilize that wisdom, and then you start doing those things. So that's just something I've been thinking about and thinking, that whole mindset for me changed entirely because you end up going from a more negative, man, I wish I had done something in the past that you can't change. There's nothing you can do about it, to a positive mentality of, hey, these are actions I can take that can actually change my own future. And that whole mindset change was awesome for me. Nicholas, what's going on? Interesting how quickly sentiment changes from insanely bullish to bearish again. Yeah, Zach leaving company, weak US Tesla sales, reinflation, weak job openings, Elon's operation news, Elon versus Zuck. Yeah, stock market can be a roller coaster. It sure can. And one of the things to look at is, these are things that we have discussed. And so many times we let our emotions come in and we're excited. We were on a bull run. The first half of this year was absolutely outstanding. And then everybody's like, what could possibly bring us down? But you have to remember, we went through this exact same thing we went through COVID. Going through COVID, we're like, man, we're never going to come under 1,000. What could possibly come out? And then Elon decided he was going to sell because he had to. So he comes out and he sells stock, totally out of the blue. Just information we could have never predicted coming out happens. And then that comes through and look at the stock. It ends up toppling from there. So these are just the things that, you have to pay attention to. There's always, and they're not all black swan events, but they're definitely events that come out of left field that you would have no idea, could never predict them actually happening, and they happen. So this is why, again, we follow the charts, and the charts aren't going to predict everything, but you can kind of get a sense. Gort has been following all the lines. That's the lines of Gort, and we've been on a downward trend. And it's like, all right, we know August is typically a slower month. It's usually lower volume. If we do get a pop like we got a little bit this week, it sells off relatively quickly. There's not a lot of buying volume coming in. So these are just the things to pay attention to. So we may not know exactly what's going to cause it, but when we're on these trends, you're kind of like, all right, there's not enough excitement to make things go up. So you're just kind of like, hold, or some people maybe sell. Again, I'm not one to sell myself, but maybe you hold. Maybe you just, I lowered my dollar cost average, but now as we're coming down, we're getting closer to the point where I'm going to actually bring my dollar cost averaging up, and I'll be spending more money on Tesla as it comes down. And so jumping into the charts, we'll take a look at them now. Let me get over here. bring this up for you. All right, I'll make it full screen for you guys. So again, we continue to follow this downward channel. We are in it and we're just keeping on traveling down. Now we do have this gap above us. So I know at some point we are going to fill this gap. So again, when I look at things like this, there's a gap up to 289.52. Chances are when we hit that, we're going to be crossing 300 as well. So to me, this is actually a very, very bullish sign. And the further down we come, means the higher upside we have in the future. I mean, long term, those of us holding 5-10 years, we're going to hit $1,000 again. It's not even a question. So at this point, it's going to be a 4x. So the further down we come, the more it's going to be multiplying our money and giving us a better return on our investment. Now we have this gap at 235. So chances are we're going to be filling this. I mean, we were pretty close today. We came down to 238. Below that's a gap at 221.91, and then below that there is a gap at 207. You go below that, there's a gap at 192, or 194. There's a lot of gaps on the way down, and we've talked about it. And I think what it comes down to is when we're looking at the gaps and the macro environment, it's going to be, can the Fed actually give us a soft landing or not? And there's a lot of signs that are showing that one little thing falling out of place could cause a massive cascade domino effect of things toppling. So we're in a very precarious situation right now, just waiting to see what's going to happen. And, honestly, that's really the questions that a lot of people have are, can the Fed actually pull this off? We have a lot of data that shows that we are heading in that direction and the Fed can actually give us a soft landing. But then there's also a lot of other information out there that's saying, hey, there's a lot of stuff that's in question that, again, if one thing goes awry, everything can come unwound. And, we're looking at credit card debt is over $1 trillion right now. We're looking at auto loan defaults are skyrocketing up. There's repos are going up like crazy right now. But then on the other side of the coin, we've got mortgage defaults are actually coming down, which is ironic because if auto loans are going up, how are mortgages coming down? Maybe it's because the people who ended up buying these houses were just better qualified. That could possibly be it. Don't know for sure, but that's one of the things that we pay attention to are all these little tiny pieces of information. Imports and exports coming out of China are slowing significantly, as low as they've been since 2008. That could be a problem. Again, my phone broke. I'm back. Tesla will be fine. Tesla's good, of course, going to be fine. That's not even a question. Make a dental appointment to fill some gaps. So Tesla's going to be fine. That's not even a question in my mind. Again, to me, this is a buying opportunity. And I was discussing it. I reposted it over on X from Gort saying that, every 10 years or so, we get these amazing buying opportunities. We got those last year and earlier this year. We are basically, as far as I'm concerned, still in that place. We're not as low as $100, but $242, I think, is a great buy. Again, I think we're going to hit $1,000 again by 2026. So that's a 4x of your money from right now in 3 years. Now, obviously, not financial advice. I don't know for sure that that's going to happen, but based upon all the information we have, based on what Elon is telling us about version 12 is going to be a complete rewrite of what FSD is right now. And it's going to be an AI rewrite of all of it, which means it's going to be cleaning it up. And, they're already doing QA testing on it right now. This is significant. FSD is that game changer. When Tesla does end up solving that, forget about it. The stock is going to take off as soon as Wall Street sees what kind of revenue it can actually bring in. We're going to take off. And right now we're getting those buying opportunities. It's why I buy every day. But in the very near term, 6 to 8 months, I think we could be coming down. Again, we're on this downward trend. If we get one of those dominoes to fall when it comes to the macro environment, it could topple things down even further. And we fill a lot of those gaps on the way down. maybe all the way down to that $114 gap. People get mad at me when I say it, but if it's not on your radar as a possibility, you're not doing all of the due diligence and research you should be doing. So again, I'm not hoping it gets down there. Like, part of me does hope it gets down there so I could buy more at those levels. But, I do want the stock to go up as well. I just want to be able to buy more for lower in the near term. So that's my thoughts. Nicholas, how do you think about this recent CPI data and PPI? I've been warning about reinflation, and probably CPI in August will be 3.5%. You have been, and I remember you saying that back in July. August 3.5%, September 3.8%. So I think the same thing. So year over year numbers, you have to remember we were starting to come down last year when it comes to CPI. So it's not so much reinflation. The month over month is what I look at, but the forecast was to go up month over month. We've been seeing, energy costs going up over the last month, oil, all of those things going up. So with all of that going up, it was just kind of expected that we were going to be here. And again, this is one of those things where, yes, we had a great reading in June. Now we've gotten July's reading, and it's not as warm and fuzzy for the Fed. And this is going to tell them, hey, a pause was probably good. Going up one more time on rates, probably good. But we have one more reading coming out for CPI and PPI before the next FOMC meeting. If it goes up a little bit more, I don't know if they're going to go up on interest rates or just hold the pause. I think it's going to kind of depend on what the numbers actually look like. But don't forget, core CPI year over year is still sticky. It's while, yes, the forecast was 4.8 and we came in at 4.7, it's still 4.7. It's still really high compared to what they want it to be. They're really kind of looking at the housing market and saying housing prices need to come down. And that's kind of where it's really stuck right now. Looking at month over month, it's not bad. 0.2% ended up coming in at 0.3% today. So for PPI, everything on the PPI was 0.1% above expectations. Now, the problem with that was some of the expectations were higher than last month. So coming in higher than the expectation of being higher is a bit of an issue. So I think this is going to give the Fed something to think about and digest before the next meeting to determine, are they just going to hold on the pauses, or are they actually going to do one more rate hike before they end up fully pausing? But I think at this point, they're also going to be pivoting next year. They've already said that. They're mostly going to be doing 3 rate cuts next year. But historically, again, when the Fed does rate cuts, typically it's because something else is going on in the economy that forces them to do that to re-stimulate things. So yes, raising interest rates is forcing the economy to slow down. They will have to re-stimulate it. The question is, are they going to be re-stimulating it on their own terms, or are they going to be re-stimulating it because something is forcing them to re-stimulate it faster than they expected? That we still have to wait for. And so looking at what I think we're going to see for the next couple of readings, 3.5 to 3.8, it's possible. Again, we saw last year when the Fed, in February, readjusted all of the readings from the prior year. Who knows how accurate these readings actually are? There's a lot of change still, I think, ahead of us. I am still bracing with cash. Again, I'm coming up with a new strategy. I guess you could call it probably a Warren Buffett style strategy, more of a longer term dividend for a cash flow play in the future for passive income. I'm working on something for that, mixing up a lot of these high yield dividend ETFs, as well as some staple stocks just to have the dividends coming in. When I come up with that, I'll share with you guys. I'm going to share with members and patrons first because it's going to be a work in progress. So you guys can see that work in progress as members and patrons. And then once I actually get it finalized and figure out what I'm going to do, I'll share it all with you guys on here as well. But that's kind of what I'm looking at. And I think this next year is going to give us a great opportunity to be able to invest in that. Don't forget, fortunes are born during bear markets. And while theoretically you can say we're not in a bear market, I still think we're below where we should be. And I think we have some room to come down on this downtrend and still have some opportunities over the next 6 to 8 months. Cruz and Waymo approval for San Fran should pave the way for FSD rollout. Yeah, I've been saying that all along. While yes, Cruise and Waymo are geo-fenced into San Francisco and other cities that they're in, they don't have the same technology as Tesla. They're functional technology in those specific areas, and it's going to do one of two things. It's going to pave the way for regulations because they're going to be active and out there. Plus, they're going to give the public a little more comfort with this as we go to a fully autonomous rollout. And when there's more and more people getting comfortable with it, that is just going to go down to same word of mouth. Word of mouth is going to be, what shares people say, hey, yes, I've ridden in a vehicle that has no human driver. It drove itself. And people are going to start talking about it. You'll get the chatter out there, and Waymo and Cruise will help with that. And then when people are like, hey, we can do that in Tesla anywhere, they'll be like, oh, let's try it out. And then more and more people get comfortable with it. So yeah, I think you're absolutely right, Raymond. It's going to pave the way. How do you think BRIC will affect the economy, or what is your take on it? What is just curious what BRIC is. Just want to make sure I'm speaking about the right thing here. So let me know what BRIC is, and I will absolutely share my thoughts on that. Thoughts on Rebellionaires take on YouTube? Yes, I was going to share that with you guys. So I read it, I watched it, and I totally agree with Brad. It's actually something I had mentioned on here as well. Is when Tesla stock itself is going up, you will get a better return on that than you will from TSLY. That is no doubt. Gort and I did the numbers on that for the first half of this year. You would have gotten a better return from just investing in TSLA than TSLY. Not a question. Brad going over all the numbers for the last decade, basically, of this, if TSLY was around based upon TSLY's strategy, there were like 3 years where TSLY would have actually outperformed Tesla stock itself. But don't forget, over the last 10 years, Tesla was basically going up all that time. The only years that that TSLY would have outperformed were years that Tesla stock was down on the year. So what I come up with on that is, if I feel that we are in a downward trend, and I think that the next 6 to 8 months could be rough and pull everything down significantly, TSLY will actually do well. Now, yes, right now it is tracking faster down than TSLA is. So anybody, Gort and I have, again, run the numbers on this. It's fallen further and faster percentage-wise than TSLA. But the dividends come in and make up for some of that. So if the math that Brad did is correct, and my theory is correct about us pulling down over the next 6 to 8 months, I'm going to stick in it. I'm not going to go crazy with it. I'm not going to go all in. I'm kind of just holding where I'm at right now. And I'm going to let the dividends themselves dollar cost average and bring my cost basis down on it. If I see an opportunity and I think we're still on this downtrend, I may add more right before the X date. I'll keep you guys posted on that. But once I do see that we're going to hit a turnaround and TSLA is going to go back up again, I will thin myself out of TSLY because it's going to be better to be in that. But I'm also looking for cash flow generation. So this is where different strategies come into play. So if you're just looking for a long-term investment return, then TSLA is the place to put your money. If you're looking for cash flow generation now, TSLY might be a good strategy to have some money in. That's what I'm doing. Again, not financial advice, but that's what I'm doing because I'm looking for that cash flow generation, because my intentions and plans right now are not to stay at my full-time job for much longer, and I'm going to need cash flow coming in. I do not want to have, how can I buy more Tesla stock if I don't have money coming in? So I need that cash flow to come in order to purchase more of the stock. If I don't have a job, I need it coming in from somewhere. So that's why I have my strategy with TSLY. And that is strictly what it's for, is just to get that cash flow generation coming in. Obviously, long term, ideally, within the next 10 years, Tesla does dividends. And if Tesla does dividends, game on. It doesn't even matter. Don't even need TSLY anymore. I'm trying to accumulate as many shares as possible with TSLA to have exactly just that. So that's my take on it. I think Brad was absolutely right. I think you certainly can. If you're trying to do it for a long-term play in TSLY, it's not good. We've discussed it before. TSLY is not going to be a long-term strategy. It's one of those, I'm getting in it, quick hitting. I might be looking at doing some dividend hopping I'm going to be doing some math and timing on that. I'll share that with you guys as well. Dividend hopping is where you line up like 10 different dividends, ETFs and stocks over the course of a month. And you just make sure that you can time it so you take money in and out, in and out, in and out, in and out, and you can use the same amount of money to get dividends from multiple different stocks and ETFs. It could be dangerous because if the equity value changes too rapidly along the way, you can actually erode some of that. And if you're doing it in an account that's a taxable account, you have to take taxes into account as well. So lots of different things there. Plus, then you have to worry about the wash rule also if you're taking losses, and a lot goes into it. So that's why I'm going to do some strategy playing on that over the weekend. But that's where my take is on that. But again, I think Brad is absolutely right. If you are going to be in this for the long term and you don't have to worry about cash flow, TSLA is probably the better place to put your money for the long term. Again, I think it's going to come down. And because I think it's going to come down, TSLY might be the better strategy. I'm going to take a gamble on it. I'm going to try it, and I'll keep you guys posted on the results. Brick. Okay. Brazil, India, Russia, plus South. Oh, yes, BRICS. I have heard about that, and I don't know how far they are into it, but here's my thoughts on it. For the US economy, not the greatest. Could be good for crypto. Because for crypto, that could bode well. If we've got BRICS coming along and they are trying to do something to squash the US economy, and obviously the US is the strongest and they're trying to, do the same in the other direction. Some people may just be like, screw everyone. We just want to go into cryptocurrency. So that could be a good thing for cryptocurrency. Now I look at, from a Tesla standpoint, Tesla's already in China. Tesla is really hell-bent on getting into India. So being on both sides with the US and the Western world, along with China and India, bodes pretty well for Tesla. Not going to lie. That to me seems like, I don't know if maybe this is one of the reasons Elon wants to get into India. I truly don't know. I'm sure there's a lot of different things and factors that play into it. But yeah, it's one of those things where some people just don't like the fact that the US is what we are. And being an American myself, there's a lot of shade that's going on in our government, and I don't want to see it crumble because there's way too many good people out there that will be negatively affected by it. However, we are due for a shakeup, and hopefully it's not going to do too much damage. And yeah, so China, Russia, India, and some South American countries moving away from the US dollar, new gold-backed currency. Yeah. Honestly, I wish the US would go back to the gold-backed currency. But again, that, it could, don't worry about it. No worries. It's going through text. I text people enough times where I'm like, what the hell are you talking about? I got a buddy who does voice to text too. And I'm like, what the hell? So I've got to translate, but no harm, no foul. We're all good. But yeah, going back to the gold-backed currency, that's fine. And again, cryptocurrency, I think, is going to end up becoming a strong player as well. So we'll see how. I think the next decade is going to be questionable, and I've made some predictions over the next decade where we could be seeing an AI bubble very much like we saw the dot-com bubble coming, and could be coming over the next decade. Basically, internet kind of started up around the mid 1990s. Took about 5 years, 6 years before that bubble really got to a head and then popped. I don't know if we're going to move faster now because of the internet. But here we are in 2023. So it could be within the next 5 to 10 years, maybe we see this kind of really expanding and becoming another bubble itself. And then maybe we kind of get some sort of massive crash, sort of like, hey, centennial anniversary of the stock market crash of 1929. Obviously, nobody wants to see that happen, but if every 10 years or so we get a recession of some sort that pulls the market back, you would think that maybe every 100 years we would get a massive pullback like the stock market crash of 1929. Don't know. Honestly, don't hope it happens, but That's a potential that's coming. So this is why owning assets are so important, and having cash flow coming in is just setting yourself up in the right places is good. Um, it's better to own than be owned. And what I mean by that is, owning property, owning stocks and investments, owning companies are the places where you would want to have your money versus just being someone who works. Somebody had made a post the other day mentioning how, the CEO of a company making $25 million works 70 hours a week. Yet you can go in there and own the stock itself. And if they pay dividends, you could be making money without even having to work for the company. You just own it. And you could make potentially, significant amounts of money to live on and not having to do a second of work for that company. So, that's just different thoughts of having on this. So if we get into situations in the future where the economy gets really bad, um, it's better to be an investor and an owner. Obviously, you want to be careful with what you own and stocks, but that's why real estate is also important as well. Like land, or just owning land, places for people to live is always going to be valuable. Saw a picture of Lathrop with hundreds of megapack waiting to be shipped out. Looks like finally ramped out. Can't book profits for months. Yeah. So that's a problem with the mega packs, and I wouldn't call it a problem, but so mega packs, they can line up a million mega packs for someone. They could get them all set up on the ground, ready to go, but they cannot recognize that revenue until they're actually plugged in and turned on. That's just how the mega packs work. So, but it's awesome to see that. And I don't even think Lathrop is fully, they're not even fully ramped. I think they have until, I think their strategy right now is 2024. Sometime in 2024, they'll be fully ramped, like end of 2024, same as Shanghai. So we still have another year plus of them being able to ramp that up to get even more mega packs out, because they're sold out through early 2025 already. It's absolutely nuts. So we're just, energy's coming. There's so many things coming for Tesla, energy, FSD, compact car, Mexico. I haven't even heard about breaking ground on that. India's coming online, maybe before Mexico, who knows? So much happening. But of course, where we are here in the near term, we've got Zach Kirkhorn leaving and VT coming in. And, that's, again, Tesla's lost some bigger players. I think, Zach is awesome. Love what he did. But I think Andre and JB were bigger losses to Tesla than Zach. So quite honestly, if Tesla obviously barely faltered, for the other two, you could say with JB they did, but that's when the Model 3 was coming out and they were getting a lot of pressure coming down on them. So, to me right now, it doesn't matter. Tesla has such a strong team built up and backup players for everyone else out there. Doesn't even matter. Tesla fans get too excited with some equipment digging trench in Nuevo Leon test site, but hope for real groundbreaking soon. Come on, hurry up. Put the factory up. We'll help you dig. That's awesome. Oh man, that's good. I'd love to see that. Oh man. Yeah, and X, I don't know how many of you guys are over on X. I'm there, and they just lowered the monetization requirements to 5 million impressions over 3 months. I'm still short of that, but if you guys are over there, please follow me, follow Gort, follow Karav. All great information from those guys. There's a lot of great people over there, so give them a follow. And quite honestly, I think for me, I have utilized, I'm on Facebook, I'm on Instagram, I'm on Patreon, which Patreon, thank you to all my patrons. That's awesome. I love you guys over there. YouTube, obviously, I'm on here. I'm on Threads just because I wanted to try it out and see what it was like. And then I'm on X. And I'm like, X is the place where I can literally just put everything. Like YouTube is awesome. I met so many of you on here through YouTube. YouTube has been fantastic to me. But in order for me to share everything I want to share, I have to have 3 different channels. Facebook, I can put stuff up, but it's like, I don't get the same traction. Facebook, like I see what Facebook wants me to see, and the algorithm is very wonky, so it's not great. But over on X, I just put down everything about me, uniquely me, that I want to talk about and share and express is there in one simple place. It's really nice to have. And I know there's some things like the YouTube video setup is way better than X right now, but it's coming along. It's getting there. Like we're going to end up being able to do better lives on X as well. So very excited to see what's going on there. So for those of you guys who are not on there, I highly recommend heading over there. I'm going to be I put a lot of stuff on there that I don't put on my other platforms just because it's easier to just put it all over there. Let's see. What else do we have in the news this week? CPI, PPI. So CPI was actually good. CPI came in a little better than expected, but PPI was the other way. Problem is PPI tends to be a leading indicator for CPI for the following month. So we may see CPI go up slightly. Now, granted, the expectations for CPI were higher and they beat those expectations, but 3.2% year over year was still higher than the 3.0% we got last month. So we'll see what comes in. And again, whether we're going to come in, as Nicholas said, at 3.5 for next month and then 3.8 for September, we'll have to wait and see. Not sure if it's going to go up that much. But again, if PPI went up, we might end up seeing CPI go up as well. Actually, I wanted to jump in. I'm just going to bring up the charts for TSLY and show you guys that. So yeah, so TSLY, again, this is still in that downward channel also. Now, the gaps are very similar. So it does track with TSLA. It's a little more exaggerated currently. Now, the other thing to pay attention to is when you hit the X date, you drop the amount that the dividend is going to be. So it dropped exactly 83 cents from, or 86 cents from when the dividend came out. And that was it. No, it was 83. That's right, 83 cents. So it drops 83 cents, and then it really hasn't recovered from that. But again, there's still the gap above here, and I think this gap will get filled. So another reason why I'm okay with dollar cost averaging into TSLY, because yes, it's coming down, but this means that I can accumulate more shares. Your dividend pays out per share. So as it comes down, I can actually accumulate more shares, get more of that return. Now, granted, the return is definitely varies a lot. So it may not be as good, but we have gaps down here to fill. Maybe it comes down here, but then it could come back up and fill this. So as it's down here, could be accumulating more shares, getting that return on my investment, or getting those shares up, getting that return from all the dividends. Then as it comes back up, the equity value goes up as well. And as we saw this year, the payouts were pretty darn significant on the way back up. Now, going back up, it's not going to pay out as much as a TSLA will, but again, you can still make that cash flow coming in. Again, I'm testing it out. I'll keep you guys posted on it. I'm very excited about this dividend strategy that I'm coming up with. I have a lot of numbers I need to run on different things, but it's really going to give me a set goal. And I'll be like, all right, these are the stocks and ETFs I want to own. Now I just need to figure out how many I need to own. And then it's just a matter of math and time. Hey, how much do I have coming in to put into these stocks? How many shares have I accumulated? How many shares do I need? The countdown begins to when I can be done with working and have enough passive income coming in from just dividends alone to go out there and do what I want to do with life. Again, it's very much a Warren Buffett type strategy. I'm just trying to do an accelerated version of it, because if I started this when I was my son's age or even 20 years ago, again, going back to that thesis from before, I wish I had done this 20 years ago. I can't. So what do I wish? What does 63-year-old me wish I would do now? And I want to do this, but I want to do it wisely. And I want to do an accelerated version, but not too risky. And that's kind of what I'm playing with here. And I'll try a few things, see what works, see what doesn't, and I'll keep you guys posted. Let me actually jump onto X super quick and see if there's anything there. All right. And my impressions are up on X. Fantastic. Thank you for following me over there. I'm at 246,000 for my impressions for this current 28-day period. Going to bring up this. Yeah, so these are my analytics here. Actually, let me reboot. Yeah, so 246,000. So I'm up nicely. So thank you all again for for all of your support. And let's take a look here. We talked about that the other day. Let's see if there's anything new going on. Nick Gibbs. Yeah, Nick Gibbs and I are on the same page. Financial independence, 4 or 5% rule. I gotta talk to Nick about some of this stuff. There's another video from Darth Dividends also. Again, I'm gonna be working with him to get on this channel to discuss a lot of the dividend stuff to see if to see what you guys what we could benefit from him. He's very knowledgeable on that. Let's see. Anything else new? Peggy's all over the place. If you guys don't follow Peggy, definitely follow Peggy too. Jesse Dow is awesome too. If you guys don't follow him, definitely follow Jesse. He and I have been having some good chats about Tesla, about the end of this year, potential macro situations going on. I don't know if there's anything. Hasn't been a ton going on. Obviously Zuck and Elon fighting is going to be like, I would love if we can go watch it live. Over in Italy. Hell yeah, I'll go over there. I'll watch that. Doesn't look like there's a lot going on. Well, we'll cut it there. That's fine. Man, I got my race this weekend. Sunday I will be racing. If anybody is in the Boston, Massachusetts area or anywhere, it's in Barre, Massachusetts is my race on Sunday morning. If anybody is there, feel free to stop by and say hi. It's only like an hour. I'm racing at 9 a.m. My goal is to be done in under an hour. We'll see how it goes, but I am at my lowest weight I have been in over 5 years at 179.5, broke under 180 this week. Very excited about that. And again, that's something I can share over on X, but I can't share here on this channel because when I do, the algorithm gets all funny and questions what the hell I'm doing. Let's see. I don't have much else for you guys. There was again, a downtrend of a week. I'll pop the charts back up quick. Just that downtrend of a week. And again, oh, you know what? I wonder, that's what I wanted to bring up. I'll show you. There we go. I'll find it for you now. The lines of Gort. Because those are important. Here we go. Hey, look, it's me. All right, so here's the lines of Gort. And again, if you don't follow Gort, highly recommend it. So this is the downward trend. So this was all of 2022, that massive bomb all the way down to 100. The year that we've seen so far coming up very nicely. So this is kind of where we're at here. And based upon his charts and trends, on the way down, this is the potential. We have broken this line right here. So coming down would put us right around that $200 mark based upon his lines. And these lines have been pretty accurate as he's gone. So is 200 in line? Will we see this coming on 200? Now, again, this here is still following this upward channel. So do we hit 200 and then continue up from here? That's the question. So is 200 going to hold us and then we push up, or are we going to hit 200 and break below it and start a new bigger downward trend? Those are things to pay attention to. But as of right now, based upon what he is seeing here, we could be coming down to $200. So I'm paying attention to it. We'll see if that actually transpires and comes down to 200. Again, the $200 level is where I will be increasing my daily ad. I am right now at $15. I will increase that to $20 if we break under 200. And then from there, if we do continue down under 150, I make it 25. If we hit 125, I'll make it 30. Again, I don't know if we're going to come down that far, but I've got my strategy planned out for anything. That's what I talk about being an agile investor, is be ready for anything. That's really all I got for you guys. Again, it was an exciting week macro-wise. Nothing super crazy going on anywhere else. We're just kind of in this holding pattern, waiting to see what's happening, what's going on. Otherwise, you guys enjoy your weekend. I actually have Monday off, so I will probably have a video out earlier in the day on Monday. We'll see how the market reacts to everything, whatever happens over the weekend. Otherwise, you guys have yourselves a wonderful weekend, and I will see you guys in the next one.